Thing number one in the written version, we're now on thing number three. Going back to Shockwave Medical, as we talked about the Shockwave Takeover issue. Shockwave Medical, ticker SWAV, being acquired by Johnson and Johnson, who we all know and know well, ticker JNJ. Gary, tell us more about that.
Yeah, so we talked about this last week. Shockwave Medical makes a special kind of stent that can be placed where excessive calcification or hardening of the arteries prevents placing a normal stent. The prior standard of care for something like that was a device called a rotablator, which is basically like a blender on a wire. And I'm sure you can all figure out the danger of that, right? You could perforate an artery, and if you nick an artery with a blender, the patient can bleed out and die in minutes. It was a dangerous procedure. Shockwave, so much safer, so much better outcomes. They're taking share. They're growing in peripherals, which is a fancy way of saying placements for arms and legs where people have lost circulation there. The international growth is huge. Deep knowledge investing with the help and assistance of board member cardiologist Dr. Paul Thompson, who suggested the idea and brought in Dr. Dan Fram, an interventional cardiologist, to work with us and explain the technology. Deep knowledge investing took a position in the stock at 190 in December, just 4 months ago. And so at 190, I said, look, this stock is a huge buy. And our thesis is they will be bought by Johnson & Johnson, Boston Scientific, or Medtronic for somewhere between $300 and $350. And last week we got a definitive agreement from Johnson & Johnson at $335 in cash. So, literally just 2-3% above the midpoint of the range that we were talking about. DKI subscribers on this one made more than 70% in about 3.5 months, which is a pretty good way to stay in business and make a lot of money.
Gary, going back a couple years now, I think Houghton Mifflin, right? In terms of your initial recommendation for that stock, and similarly had a takeover event, and now you have Shockwave Medical here, short couple years afterwards. Just curious from my side on a macro level, right? I mean, what is it that you look for? What do you see that others don't, right? Are there any things in particular that you can tell our viewers and listeners just about what you're looking for from a DKI perspective?
Yeah, so in the case of Houghton Mifflin, that was a company we started buying at 490 something. I want to say 492,
Yep.
493.
Yep.
The company was acquired for, I think it was
21
$21.90.
bucks. Yeah.
Yeah, 21, something like that. So DKI subscribers on that one made more than 4 times their money in 13 months is what it was.
Right.
Just over a year, they made 4 times their money. In the case of Houghton Mifflin, the company was trading at distressed levels coming out of COVID. And what had happened was, so the company makes educational materials, and they had a horrible sales year. But the reason for that is their sales come from the Board of Ed or the PTA or whatever group in a particular school district is responsible for choosing educational materials. Well, during COVID, those groups didn't meet. They didn't get together and figure out what books they wanted to buy. And we looked at that and said, okay, well, that's a problem for this year, but that's not the case going forward. We don't have a situation where kids are no longer going to have school books. Everything just got delayed. And the amazing thing about it is those weren't lost sales. Those were deferred sales. So the company traded down on a temporary lack of sales. But what we knew was, well, once these school boards start meeting, and they will, they're going to get those sales. There basically was pent up demand. And so the market was looking at it wrong. They were looking at a one-time current situation as the way it will always be. And, people are a little weird like that. People have a tendency to look at the current situation and assume that's what's going to happen. At Deep Knowledge Investing, we're focused on, okay, well, this is where we are today, but what's going to happen tomorrow? And, this is now twice in 2 years, we've uncovered stocks that have gone up huge on takeovers. At this point, Deep Knowledge Investing has more recommendations that have returned our subscribers more than 100%, that have more than doubled than we have stock picks that have lost money. That's all time. So, you know, I don't think that's a record that's sustainable in perpetuity. I don't think that's doable forever, but it's pretty rare to have a record that good this far in.
Never say never. Keep the iron hot, Gary.
We're working on it. And actually I have our next idea, you know, locked, loaded, ready to go. I'm finishing up the research on it. It is definitely one of those things where the reason we're going to be buying it is because the potential is for it to go up a multiple of the current stock price.
Absolutely love that. Stay tuned for that coming up. When will that be, Gary? Do we have any time horizon on that?
I have more research calls with industry experts this week. I'm speaking with management and the newest member of the board of directors of this company later this week. And then I'll need a little time to put together a model, but you know, that's something that subscribers should expect to see in the next few weeks. Obviously, we're not going to announce these kinds of money-making opportunities in public until much later, right? Our paying subscribers are going to have access first and hopefully at the best prices.
Great stuff. Excited for that. Moving on.